Good morning, Brian, and good morning, everyone. Glad you could join us today. Getting back after a week off last week. I hope everyone had a great holiday weekend. And in case you're thinking, wow, Todd had a rough holiday. He lost a ton of hair.
Yeah. What happened to Todd? Oh, my God.
What happened to Todd? Yeah. He looks like Benjamin Buttons. Todd is off this week, so some much overdue rest and relaxation for him. Although I did hear he went out to California and started an earthquake. So
started an earthquake,
I'm not sure.
Yeah.
But great to have everybody back. Brian, looking forward to catching up with you today. We've got a lot to go through to start the week here on Monday, July 12th. So real quick, before we begin, quick disclaimer. Trading involves risk. Trading on Nadex involves risk. If you put real money in a market, you can lose that money, whether that be futures, Forex, stocks, Nadex. You need to understand that risk. We spend a lot of time, I've known Brian for quite a while, spend a lot of time talking about risk. It's one of the most important aspects. We're going to be talking about the markets today. We're going to be talking about certain levels where we may see support and resistance. This is for education, educational purposes only. So if you're following along, look at those levels, study along with us. That's what we're here for. And with that, Brian, I will turn it over to you. With your,
cheers, Fernando. This is to you. Calling for some coffee. I definitely agree. Monday, I was in a lacrosse tournament. As you guys know, I'm a little bit of gray hair. I'm not a spring chicken anymore. But 3 games and 90 heat on turf. Everything is like a little sore today. It's like, wow, that didn't realize that would be injured. So coffee is definitely good, Fernando. So yeah, interesting day in the market. It's Monday. It is a traditional summer Monday. The only thing we have today is a 10-year bond auction. It doesn't necessarily affect Nadex that much. As far as headlines go for over the weekend, things we can look out for today, I would say the biggest thing that we have sitting out here right now is, basically news about 2 hours ago that Tokyo is entering its 4th COVID emergency shutdown. It's going to go basically till August 22nd. How does that affect us and what we can trade? Not too much, but again, it is bringing up concerns. Obviously, everybody's talking about the Delta variant. In 3 weeks, it'll be the next variant, or 2 from now. I mean, who knows? It's one of those things. Everybody is so worried about the Delta variant out there. And again, because of the Olympics and everything with, the amount of people there are no spectators at the Olympics, but obviously people have traveled there in preparation for that. And they want to kind of stem movement around. So kind of interesting. I think I'd be slightly angry if I went to Tokyo for the Olympics and then they slapped a lockdown to where I was basically stuck to my hotel room for the Olympics. I feel like that, it is what it is. It's a hard scenario. So, but it is out there. We've had issues in Australia. We've had issues in Japan. We've seen, they're basically talking about now in most states, 90% of the new cases are the Delta variant. And as I mentioned last week, it is important to understand that there's no such thing as COVID zero. There will never be flu zero. This is how viruses work. The goal is to figure out a way for us to be able to manage this. And that's, again, the market. I don't think the United States is shutting down. If it gets to a stage where we need to shut down again, we're in major trouble as the world, right? The globe.
Yeah, absolutely. And I think real quick on Tokyo, Brian, one of the interesting things is while there's no spectators, just the logistics and the number of people that are there to support the Olympics beyond the athletes.
Yeah,
I mean, it's got to be 10 to 1. It creates a really difficult situation.
Yep.
Over there, and I think you're going to be hearing a lot about that, but I don't think anybody really knows what it means from a financial aspect. Like,
I mean, they're losing out on, they said, just enormous amounts of money. I mean, typically the Olympics brings in just revenue in general is just so high. I mean, it's not, we just think about I'm watching on TV, I'm watching it on streaming and all that, but the infrastructure has to be built up before the Olympics. Tokyo said they're losing billions with the amount that they've built up in preparation for this before COVID happened, and now having to kind of with delays and just the lost revenue for local businesses. It's just a huge, I would say at this point, the Olympics is typically something that brings a huge boom for your economy. This is doing the exact opposite. It's creating a huge drawdown for the Japanese economy, which again, as a currency trader, Japan always likes to stay more on the weaker side, but this is going to keep them weak for a lot longer than I think they originally had planned. The economic boom will not happen in Tokyo, so they will be lagging behind. Versus, say, Germany, where Germany is kind of exploding right now. So As far as news goes today, there's really not a whole lot. Like I said, bond auction. There is some important news, and it will kind of lead us into what I think we should be looking for trades today. Tomorrow morning, we have CPI at 8:30 in the morning. It'll be right before we go live tomorrow, so that's why we're bringing it up today. One of the interesting things about this is we've heard this month after month after month after month that inflation is going to be transitory. Well, transitory means that it should at some point go negative, right? Because transitory means it comes and then it goes, right? Well, the forecast right now is supposed to be that it is 0.5. It may be 0.1 lower than what it was last time, but it's still a positive score. And as far as I know, Dan, if you keep adding and adding and adding and adding, that's not what transitory actually means.
I was not a math major, but I would agree with your assessment.
Right. Okay, good. At least we're on the same page there, so I wasn't misreading it. But that's the thing. We keep seeing positive. Remember, I've always said July is where we're going to see inflation go back down again. It's not here yet. So it brings us over to gold as well as the indices. And I think we'll start off with the indices today first. If you remember I guess you guys weren't here last week. It was for my students. I talk about this level at 43.50. And, if we were going to get some basing here, that this would be kind of the new area where buyers would start, creating some, basically buying demand, right? We did get some basing, and that's kind of where it's stuck right now. And the reason I started with a yes is because it's down 0.08 right now. It's kind of in the middle, right? It's the guy that's lost, right? Typically, what we're seeing on Monday is once we have an established trend, we tend to follow it. There's been no European pressure up or down. We had a little, the European Open basically sent us down, then we kind of pulled back up, went down again, and pulled back up again, and we're exactly where we were for the UK Open. I would say right now, the ES is basically looking for what is the trend going to be today, US traders. So when they're stepping in the next half hour, that will help establish a trend. Could we see a break up into that 4,400? Not a lot of catalysts today for it, but there's definitely some catalysts tomorrow. So depending on what we do, look for that as a target area. And again, maybe we just really start getting strong today, and maybe it makes a really good push for it. But right now, I think the most important thing we can do is establish a level of base to where we can kind of give us a well-defined area of risk to go higher. Now, this is a guy that's in the middle, right? NQ is in the exact opposite scenario. Since the European Open, and again, if you guys don't know, if you guys are new here, the black triangles, I throw them on there for the European Open so we can get an idea of what the European session is doing. European session, nothing but straight up. We had targets last week of 14,900, 14,950, and 15,000. It's off to the races. So if we continue with with this buying, basically, the buyers are just stepping in here with really not many pullbacks at all. If this continues, again, these are the three target levels that we could be hitting today. ES will probably follow suit, but if the market stays positive, if there's no negative headlines, and this is where we're going today, NQ would be what to ride. Now, conversely, if all of a sudden all this buying pressure, we start selling and taking profit, that brings us over to where the YM is. It's pulling back from a level that my group had last week. We talked about this one coming down and pulling back. So it did everything, but it is on the weaker side where ES is basically flat, right? It's down 0.06. NQ is up 0.43%, right? Almost 0.5%, which is good. YM is down 0.32. So it is pulling back a little bit now. It's starting to stabilize. And then again, you can see there's a level of basing where we're kind of sitting right in here right now. With this kind of pulling back into that 9 o'clock, 9:30 time frame, I think it's important really to figure out, all right, if we're going to go weak today, if everything's going to turn negative and go red, if we're going to start talking more about the Delta variant today and about how the economy's in trouble and we're having major issues, that could kind of lead us back to the downside. There's been comments today about, oil is now starting to show the Delta variant kind of global risk. Again, the more we talk about risk and shutting things down and things like that, that could be bad. And again, that would lead YM. So it's kind of like you're surfing, right? If we see buying pressure today, we go for NQ. If we see selling pressure, we go to YM. ES, again, I think it's going to be a little bit slower today, but, kind of provides interesting opportunity top and bottom. Another thing that's important to mention with all three of the indices right now is make sure you know where your knockouts are for the rest of the week. You guys have seen me use this, and again, this is not where knockout is. I don't know. I don't have it up right now. I use I'll throw these purple on here, and again, I don't trade right directly from TradingView. I know where my knockouts are on my platforms that I use for charting and trading. You should do the same thing, whether it be on Nadex if you have them marked, just so it's easy, somewhere where you can find it. That way, when you see something like this, a level, and, if I had one here, you could say, hey, listen, I already know there's a knockout there. I really need to be paying attention to that level versus just having it and then going, yeah, I like a level. Let me go see. It's easier if you have them already out there. So Mondays when it's slow and there's no news, if you haven't already done your homework over the weekend, great time to go ahead and do that one. All right.
Yeah.
I guess we can. Damn, should we jump over to gold too? I think.
Yeah, let's hop over to gold.
Okay. Reason I want to mention gold is again, the conversation last week was we were talking about this channel. Okay, we were really kind of bouncing back and forth between the 1791 and the 1746, and we took one strike down and kind of came right back up again, and we had some issues with that 1791. Now advance us 1 week forward. Last week we were able to finally break through. I mean, again, enough shots in this area of sellers, they ran out, and now they became buyers on the opposite side. There was a bit of a trade down here at 1791. Again, remember the old sellers became those buyers and they stepped in on the side to it. I think it's important to note as well, and the reason why is because I did actually throw a knockout on this one. We do have a 1791 knockout here, so it's kind of an interesting scenario. It's in very close proximity into an area where me personally, I'd be willing to step into it. It's an area where sellers have definitely, sellers of, let me do a different icon here. I just want to confuse everybody. Buyers came in here. Right, buyers came in here. Buyers front run the area here. They've had some issues with it again, so it's an area that I think we need to watch out for. If we see, and again, remember, gold will move with CPI tomorrow, depending on what we do today. And again, it's been kind of choppy, but U.S. Trader hasn't gotten into here yet. And why I think this is interesting as far as a level goes. And again, that's not what I wanted to move. I wanted to move the one behind it. There we go, across. There we go, back up again. The reason why is because if we go across, we can see that gold right now, 86% of people are net long. So the general consensus is this is going up, that there's going to be inflation. And like I said, the Fed has been pretty consistent saying it's transient, it's not real, it's all going to go away in July. Well, it's July 12th. Tomorrow is the middle of the month CPI reading. If it doesn't go down tomorrow, maybe there's going to have to be some comments about inflation. So again, everybody is poised for gold. And, with 86% of people long gold and this thing not collapsing through the downside, this is being driven right now by retail traders. So it's kind of, we're a little bit red for the day, but we're starting a rally now as the U.S. trader is coming online. So I think 1795, watch it because, again, we do have that knockout at 1791 as a potential area to go long. Dan, do you want to add anything to that one?
No, I was going to just comment, as far as the knockout, if we see it pull back a little bit towards that 1795 range, it is from a risk to reward perspective, it is a very attractive knockout. Mm-hmm. No guarantees, clearly, but a very attractive floor sitting right there with some solid opportunity if we get a rally.
Yeah, and same thing, looking across, guys, you can see how many times, again, we had this nice little channel up where buyers stepped in, buyers stepped in, buyers stepped in, buyers stepped in, and we finally hit the zone. What did it do? It pulled back and buyers started to establish a level, and it was a fight between buyers and sellers, and eventually when it broke through, they came and boom, exploded off. Even in this crash, that same level of buyers was able to maintain at the same area. So again, it does put us in the right area, and again, we want to make sure we get in front of those big, large positions. So it's an interesting setup. I did mention oil, and we'll go ahead and end on oil today as well. I just want to bring oil up because we keep tracking oil with big little situations. One thing that I want to bring up, and I always love when we can add kind of some learning into this whole kind of presentation in the morning. One of the strategies that I teach at my school, as well as Dan has brought up inside some of the education summits, is we talk about kind of that explosion trade, right? That news-based trade. There was an amazing opportunity last week that I wanted to kind of highlight, and I marked it off. We had oil inventory on Thursday. Typically, as you guys know, it is on Wednesday. It was on Thursday last week. And there was a setup right before the news came out. I like the fact that, again, if you've watched these sessions, we talk about the little big scenario, right? Where we have some of these little and then big movement versus the big little and then kind of the mirrors. Well, we had a little, more or less little situation last week, so I expected big movement coming out of it. Even though it was on a Thursday and we had some other news going on, which again, the moves on Thursday are not typically as big. There was a nice little trade here. And again, the average oil move is about $1.60 on Newsday, right? One of the things that I saw in here, I was like, hey, this looks great. Let me see what I have as knockout. There was not a lot of premium baked in because, again, it's not as big of a mover day. Where price was, there was a 2-hour binary. Actually, I guess it was a daily binary for about $23 risk to the top side. And I found one for about the same risk to the downside at $25, meaning that there was about $48 at risk. If it did absolutely nothing, came in completely flat, you would have lost $48 per kind of contract, right? Per kind of pair of contracts. As you can see, when it expired, it came in about, 50 cents higher than what it was. It should look more like this. So it was a 72.50 binary, and it expired. When it expired, it was up here at 73.10. So it was just one of those examples. I always like to bring it up. Remember, there's different ways to play contracts. You don't just have to play one. You can kind of play pairs. Again, this is my traditional options background. There are ways to play a range where it doesn't move at all. There's a range to play it when you expect it to break out, or you can even go one direction up and down. And again, it's all about odds and risk, and this was a great little setup. Where we are right now, again, we just took a bounce off of a level. Oil is very interesting because, again, the only news we saw was everybody talking about, oil is, they're looking at $75 as, per barrel as the Delta variant threatens, growth outlook. I'm not sure how lower growth is going to have oil go higher, but sometimes the article guys know more than I do. So, but right now, oil is split down the middle. It's 52% long, 48% short. So really, the general public doesn't really know what to do with oil. We had a decent move here. But I would say the way, everything with OPEC is really kind of scrambling everything. Hearing that Tokyo is locking down, that's one of those things that is typically considered a bit more negative. So I wouldn't be surprised if we break out. If you're looking for some type of, again, it's very rare that it will stay inside. Let me change this so you guys don't think that that's a knockout. One way to look at this is you can say, hey, listen, if we break out of 74.20, I should, maybe potentially look for a long position. 73.16 to the downside, that means we're crashing. And again, if we do start to kind of pull lower, for me, I don't necessarily have anything till really down here at 71.80. Now, that would be a big move for a Monday with no news. But again, you guys know how the little big scenario works. We have a very little kind of small area, or small price range movement in the European session. We tend to have a big mover. And if you take just this right here, actually, let's not use a news day. Let's use a non-news day. Even in this scenario, actually, this is when there's a big versus a little here. Even if I take this and I just move this over, just so you guys can see what could happen today from where price is right now, you can see we're right down here where the target level is. So just some things to watch out for. It may do absolutely nothing, be completely flat, and that's the risk of being a trader. But again, it is very rare that oil does absolutely nothing with what we see in the market. So again, that's Monday for me. I think CPI is going to be a big one. Watch for that positioning, and again, know where all your knockouts are because we have 5 days now where we're able to keep those on without an expiration.
Thank you very much, Brian. Appreciate that. And yeah, it's going to be interesting to see what oil does because I think we've got so much uncertainty. See which way it gets. Does it get driven one way or the other? And absolutely, there's a ton of different ways. That's one of the great things about binary options. You can trade them up, down. You can trade them to stay in a range or to break out. So don't be afraid to experiment a bit in your demo account. With that, real quick before we wrap up, I'm gonna remind you that trading does involve risk, as Brian said. Manage that risk. That's what traders do. Actually, the only successful traders I know are really good at losing money because they lose little bits when they lose.
They lose little bits. Mm-hmm.
Yep. And this was for educational purposes only. If you'd like to reach out to us, you can contact us at customerservice@nadex.com. Follow us across social media, and definitely reach out to Brian. He's very accessible. Support at Keep Trading Simple. With that, I hope everybody has a great Monday. Brian, thank you again. I hope those, you get fully recovered from those.
I'll find out if I'm not here tomorrow. You'll know why.
Well, I certainly hope you are. We'd miss you if you're not.
Get ready.
Yeah, absolutely. You all have a great day. Appreciate it. We'll see you tomorrow.